If you're going to be buying a house, understanding the best mortgage for you is crucial to your success. After all, it is your finances. You're going to be buying a house. This video is for you. We're going to talk about the top 5 mortgages for buying your first home. We're going to unearth the high points on FHA, non-traditional mortgages, USDA, VA, and conventional mortgages. At the end, I'm going to share a very important video with you that you'll want to watch after this video. First, FHA. FHA is commonly felt to be a first-time buyer home mortgage. It does require you are an owner-occupant. Traditionally, 3.5% down. That money can come from a gift from a family member or other eligible parties. There is down payment assistance that can be available, and the seller can contribute up to 6% towards closing costs on your behalf. Technically, you can have down to a 500 credit score, but realistically, 580 is going to be what you want, and even more so, possibly a 620 for a loan approval. They can be manually approved. If your situation doesn't fit within the box, you can have a manually approved FHA loan. FHA is great because it does allow for higher tolerance on debt ratios. That is important when you're buying a home. They have quicker forgiveness for foreclosures, bankruptcies, and short sales. There is mortgage insurance. Unless you put 10% down, it will stay on there for the life of the loan. There's a monthly and a finance up front. Again, though, don't be dissuaded to not buy just because of the mortgage insurance. Get educated about what it means to you. Condos, there is a link I will share below for approval for FHA condos. There are renovation loans, so you can buy a house, finance in the cost of improvements through what's called an FHA 203K loan as well. Reverse mortgages, for those already in the home that are older, this can be a way to get equity out and sustain living in the home at an older age. Along with a streamlined refinance FHA brings, where there's no income, no appraisal, and stability to lower your rate and your payment down the road. So high points on FHA loans. Comment below on your questions specifically about FHA loans to go deeper. Non-traditional loans. This is a broad topic. Anything from residential loans to investors to business owners, and the list goes on. So if you don't fit in the standard box, this would be your category. Residential loans can be great, low to no down payment, no mortgage insurance, flexibility on calculating student loan payments, including flexibility on future employment and recency of becoming self-employed as a physician. There are some subcategories outside of just being a physician that can qualify for this type of loan as well. Investors, those who don't or can't qualify with income, this is your home. Anything from DSCR, fix and flip, bridge loans. There are interest-only options. You can invest in an LLC as well. So this can be a great option for you. There are some trade-offs. As an example, DSCR loans commonly have a prepayment penalty. So take that into consideration if you're going to explore a DSCR loan as an investor. Business owners, this can be great because so often income is not on the tax return. So if you can put 10% down and you're a business owner and you've been in business for a while, this can be a great loan for you if you can't traditionally qualify for the house. Go off things like your 1099s, your tax returns, your bank statements to qualify for that. And I had a recent situation where I helped 2 business owners, one of which owned a roofing company and would have only had $48,000 of qualifying income. But with this loan program, he showed over $40,000 a month of qualifying income and was able to buy a beautiful house for him and his family as a business owner and not having to forego the tax write-offs that are afforded as business owners. Comment below questions you have about potential non-traditional mortgages, including if you're a business owner in the cannabis industry. Comment below. Number 3, USDA loans. USDA loans can be great if you're looking to buy outside of metro areas. I will have a link below for areas to determine eligibility. Listen, it's about property location and it's about your income to discern if you can use a USDA loan. What's amazing about the USDA loan is it can be 100% financing. There can be restrictions on the income. And again, the geographic location of that home will determine the biggest parts of the qualifications. Additionally, I've seen over the years as the lender that USDA loan has a slightly more conservative approach to debt ratios for qualifying purposes. So keep that in mind as well. But I have a link below for more information about USDA loans. And if you're in one of those rural areas and have questions, comment below. As an example, just outside of Denver, not very far, you can become eligible to use a USDA loan to buy. Number 4, for all my veterans out there, I salute you as a fellow veteran myself. Thank you for your sacrifice and service. This loan is for you. Owner-occupied, eligible members, National Guardsmen that have served long enough, surviving spouses are eligible for utilization of the VA loan. It's not a one and done, just like FHA. It's not a one and done. You can use it more than once. It is not available to family members of veterans, though. I've been asked that before. Focus is a little bit more on your residual income than the debt ratios, though the VA is very pro-veteran. And so there can be some liberal approaches as it relates to debt ratios for approvals. We've seen it as high as 64%. Doesn't say it's going to work for everybody. One of the really cool things though, 100% financing, no mortgage insurance, and interest rates and closing costs lower than conventional FHA and USDA loans. So if you're a veteran, this one's for you because also there are no loan limits. So you could buy $1 million house with no money down. If it's affordable and you qualify, something to think about. There is a funding fee, although if you have service-related disability, this funding fee will be waived for you. Other cool things, sellers can contribute up to 4% towards concessions. That concession can pay off debt for you to qualify. So ask your lender about this, and that's up to 4%. It does have a funding fee, as I discussed. That is so that if there's foreclosures, everybody who has a VA loan kind of scratches each other's back to keep those rates low, 100% financing, etc. And condos, I'm gonna have a link below. You can search up VA approved condos. What's cool about VA condos? Once approved, always approved. Really cool. There are also renovation and construction loans available for VA loans, and on refinancing, an interest rate reduction loan for a refinance to a lower rate. No income, no appraisal. It is pretty much a slam dunk with reduced closing costs for you veterans as well. This is a great loan. Comment below if you have questions specifically about VA loans. Finally, conventional loans, number 5. This is for owner occupants, second homeowners, and investors. Eligible borrowers can do 3% down. There can also be down payment assistance. There is going to be mortgage insurance if there's less than a 20% down payment on the property. There's more flexibility with the mortgage insurance on a conventional loan because you can get the mortgage insurance removed without refinancing down the road. So all those people that had those low rates could be getting rid of mortgage insurance without having to refinance. It will need to be there at least 2 years after closing if you have it, but again, you can get it removed without refinancing the home. It is very much tied to credit score and debt ratios as it relates to mortgage insurance if you don't put 20% down, and the interest rate is very much tied to your credit score and conventional loan as well. So if you have a 680, you might have the lender talk to you and compare an FHA to a conventional, or show you what you can do to raise your credit score before contract to maintain that conventional loan if the conventional loan is right for you for the future home you're going to buy. There is more restriction on debt ratios. If you're putting less down, say 3%, have a 680, 700 credit score, don't have much in savings, you may not get an approval over 45% on the debt ratio, but you may. So this is one where you really want to work with an experienced lender to make sure you don't have surprises after you go under contract. This can be great for those with variable income because if you have bonuses or commissions for at least 1 year but not 2 years, you can likely use it, whereas FHA, VA more likely will not allow you to use it less than 2 years. Rental income for all loan types, there are variances, so specifically bring up those questions or comment below questions about rental income if you're going to keep a property or already have rental properties and are buying another home. Seller concessions can be anywhere from 3 to 6%. That depends on your down payment. So keep that in mind, but ask your lender, how much can you ask for seller concessions if that's going to be part of the equation for you. You are allowed to have the escrows outside the payment. If you're buying new construction, check out my channel, subscribe because there's a video for that as it relates to new construction because you might want the taxes and insurance outside the payment. If you like to manage your money, this could be great for you as well because you will only pay what you actually owe. And if your taxes go up, your insurance go up, an escrow shortage will raise your payment and likely more than the actual amount needed for an escrow shortage. So having escrows outside your payment might be something to think about if you're going into a conventional loan as well. You can also do renovation, one-time construction, they exist. Another cool feature about a conventional loan is a thing called a recast. A recast is where you can make a large principal payment to reduce the balance owed, and they will recalculate the principal and interest on the remaining terms without a refinance and reduce the principal and interest per month to pay it off on the original term of the loan, known as a recast, like your arm cast. Definitely, if you have comments or questions about conventional loans, put those below. That is a very wide topic. If you want a video on any one of these specific loan types, deeper analysis, deeper dive, comment below on which one would best serve you. As a lender, 22 years in the business, it is all up here, folks. I'm not going to websites and search this stuff up. I'm not a realtor, I'm a lender, putting this information out for you. As I said, I would share a video for you that this one will go over some important information about closing costs, planned and unplanned costs of buying a house. This is an important one. I would watch it if I were going to buy a house. And then below, I have additional links for you about these things that I've talked about in the video. Thank you so much. I hope this is helpful to you today. Subscribe if you find value in this content as you begin the journey to buy your home.